Headline numbers still look quite aggressive at this stage. Can I ask you, what is the right action for an investor to take at this point on the basis of this data?
I think to some extent you have to listen to the Fed. The Fed has been very clear about inflation being transitory. The data today suggests that they have at least, a notch under their belt in the sense that it does look that, at least for the month of August, that there was a decline in the rate, as Jay Powell said, right? That's his definition of transitory, is not necessarily going back to where we were, but just a decline in the rate of inflation. And so we got that in the month of August. And so my guess is that I think it's a really good idea to just listen to the Fed. They've said that they're going to they're comfortable letting inflation run over their 2% target over a period of time. And then within the dual mandate of full employment, Jay Powell has spoken extensively on the importance of employment rates for minority Americans. And so I think until you start to see that move, and again, just for data's sake, Black unemployment right now is 8.8%, Hispanic unemployment is 6.4%, the overall unemployment rate in the US is 5.2%. So there's a lot of room there's a lot of catching up to do for those minorities to get, closer to where the overall US rate is. And so my guess is that the Fed will continue to be on the sidelines. I know there's going to be a lot of talk around tapering, but again, today, I think the data suggests or gives the Fed, an increased ability to say, look, we're tapering, but that is decoupled or very different from liftoff, which will likely come at some point 22, maybe even to 2023.
It's fascinating, isn't it? So the expectations are, I think, in some quarters that, as you say, the tapering discussion may now get pushed into the early part of 2022. On that basis, then, how relevant is it really for investors at this stage? Is tapering still a live argument for whether you buy or sell the S&P?
I think as you think about investing, the risk, I guess, as we think about it here at Zeo, is really to an upside surprise, right? In terms of higher interest rates going forward. The Fed, again, has mentioned that they will likely be on the sidelines for a period of time, but how long will that last? How long can Jay Powell keep the Fed governors in check in terms of you're going to look at inflation data that's going to be running hot over 2% for a period of time. And then, there's currently a slowdown in economic activity, largely related to kind of the Delta variant and a slowing of consumer activity. But if we get past that later in the fourth quarter, we're going to see a pretty strong fourth quarter, pretty strong economic growth into 2022 with inflation above the Fed's target. I think people are going to start assuming that rates are going to go up regardless of what Jay Powell says. And I think that's going to be a period in time in which you see much higher levels of volatility than we're seeing currently.
Marcus, can I ask you about inflation expectations versus what we're seeing now? Because effectively this New York Fed survey has shown that consumers are bracing for higher inflation to continue. And we know from an economist's perspective, when they see those embedded expectations, that's when they start to worry. But do you take that into consideration this time? Because it does feel as though people are seeing high prices in front of them, therefore they think prices are going up. As soon as those prices flip back, they may change their assessment on those expectations.
That's true. I think one of the things that I found interesting was the census data that was released in the U.S. today around a reduction in poverty levels in the United States across all demographics. And so that suggests that even though the consumer is concerned about pricing and at higher prices, they're able to withstand that, given that there's a little bit more income, especially related to, very aggressive U.S. stimulus spending, from a fiscal standpoint, and then obviously a very easy monetary policy. So I think, and then again, as consumers, many companies we speak to are echoing the sentiments of, yes, there is higher inflation, there are supply chain challenges, but we're still seeing very robust demand. And the assumption I have, at least right now, for the near term, is that the consumer is in very good shape. And so they'll be able to kind of absorb higher prices. The question is for how much longer?